Hello, welcome everyone to a special breaking news edition of Story Trading. Uh, you know, uh, People who follow Story Trading know that Dario Health, DRIO, is a VIP pick we've been tracking for a couple of years. This morning, there was some breaking news from Dario Health. They had a $40 million offering at 749 combined with a $30 million deal with Sanofi. So we invited Erez Raphael, the CEO of Dario Health, on, and we're going to get right to the interview right now. Erez, thank you for joining.
Hi, Ben. Thanks for hosting me. Really
Awesome.
appreciate it.
Yep, so glad to have you back. So this is definitely looks like huge news. So why don't you definitely have some questions for you, but why don't we start with an overview?
Yes, it's a huge news, not just for Dario, but also for the digital health and digital therapeutics industry that we are part of for the last 9 years. So when a player like Sanofi is saying, I think that this space is gonna be a big part of healthcare, that's a big statement. And the fact that they chose Dario as their strategic partner is a very big statement for Dario Health. Sanofi sees the overall expansion of digital health, digital therapeutics, with solutions that are more consumer centric and more digital, as something that will dominate healthcare in the future. And they feel that that's going to be part of their strategy, and this is why they want to tap into the space. This is why they worked in the last year or so to figure out who is the right partner, and we are very happy that we were selected by them to be their strategic partner. And I'll pause here before I'm going to give you some high-level understanding on this specific deal.
Yeah, sure. No, I'm excited to understand the logistics of it, how it works, how it's going to work for the consumer. But you said they were looking at other companies. Are you able to tell us which other ones they were looking at and who you were selected over?
The usual competitors, some companies that you know them. Some of them are in our investor
On track,
presentation.
Livongo, sound right?
Yeah, the usual
Okay. Usual suspects. Okay.
usual suspect, and this is something that was done post due diligence and a lot of discussions and so on. It didn't happen overnight. I mean, the actual negotiation and due diligence was for like 9 months. That's the process to
Got
get
it.
such a deal done.
Yes, and we know you've been working on this because you mentioned it on the last conference call that you were hoping to do some sort of strategic deal with big pharma. I just have a question before you get into the details of the deal, but we were hoping that maybe we can avoid some public financing because of the low share price here. I'm wondering uh, this was announced together. Is it possible Sanofi wanted you to do this additional raise? Do they have any balance sheet requirements to make this deal happen?
Yeah. So the I cannot say that it was a condition for a deal. That was not the case. But in this kind of environment, where growth companies are getting the hit, and investors are concerned about the cash flow of companies, I think it's important to show the market the strengths of our balance sheet. So if you think about the fundraise in a conjunction with the Sanofi deal, in fact, we are saying we have shareholders that are supporting the company. These shareholders believe in the long term, and we are aware to the decline that we have seen in the stock. But at the same time, the fundamental story haven't changed. The other way around, the fundamental story is even stronger than a year ago and stronger than 2 years ago. So it makes sense that this company is going to grow, and this company will be one of the leaders of the digital health category. So from a cash perspective, we felt that in this environment, we need to show the market that we have a strength in terms of balance sheet. We need to show that we have cash. We got the majority of the investment that was done here is by investors that already invested into previous deals. So we have big supporters that are supporting us for 2 or 3 or 4 deals. Two of them are the biggest insurance companies in Israel. So we are very proud that we got smart money. We did it at market. We didn't give any discount or warrants or stuff like that. And I think that this in this environment, getting the Sanofi deal done, getting the $40 million to the balance sheet, and also in a geopolitical kind of challenging environment and market environment, being able to pull off such a deal, I think that it speaks to the strong fundamentals that we have. I think that the mindset of investors should be that our company is very, very well funded, because if you're looking into the $30 million by Sanofi plus $40 million that we raised, plus the $51.3 million that we had as on our balance sheet as the end of Q3, plus a potential equity investment by Sanofi later this year, which is part of the plan, not committed yet, but part of the plan. I think that investors should feel comfortable that our company is not going to get into a stress in terms of capital need, and we have a very, very long run rate, and we feel very strong, and we feel that we just need to keep executing. And as you know, when companies are executing, the stock will go to the right place. So we're not worried about that.
Right. Okay. Well, you touched on the financials, so actually maybe let me ask you a couple other questions here on the financials before you get into how the deal looks like for consumers. You mentioned the runway. So what kind of runway are we looking at now, and at kind of what revenue level can you project that the company would be cash flow break even and wouldn't really need additional capital?
Yeah, so the current situation is that we don't need additional capital. So never say never, and there are a lot of plans, M&As and stuff like that. But for the ordinary business, it feels that we are fine given what's happening. So I want to put the disclaimer that something always might happen, but we feel very, very comfortable with the cash that we have in hand. The way that we are designing our business, the multi-condition, the fact that we can extract per every account 4 to 5x more dollars than the competition, plus the gross margins that are improving, we think that in the ranges of like $80 to $100 million in revenue, we can take the company to cash flow positive. I don't know that we're going to do that, but that's where we can take the company to cash flow positive if we want. And we believe that we have a significant amount of capital that should take us there, in between all the options that we have. So I think that going back to the market and do something on the public market in this environment, this is something that is unlikely to happen.
Okay, that's helpful. And in terms of the analyst expectations right now, we're at 34 million for 2022, 8.7 million by the fourth quarter of this year. Do you see any of that changing with the Sanofi deal? How soon do you expect that money to come in, that 30 million? Because it's a multi-year deal, right?
Yeah, so the 30 million is a multi-year deal. This is something that should contribute to the top line of the company. There are elements that related to revenue recognition and a lot of things that we need to figure out, but some of the 30 million should go into 2022 and into 2023, and we are talking around $8 million this year and another $7 million next year. I don't know how the revenue recognition and how this kind of mechanics are going to work, so I don't want to commit for an addition of $8 million on top of the analyst consensus. But let's put it this way. This is very, very positive. If you look into the revenue that we generated last year, 20.4, then this 8 million alone is almost 50% on top of what we did last year. So I think that, and this is before the health plans and all the employers and everything that we have in hand. So this is something that should strengthen our ability to, beat the consensus. And I think that into next year, and this is something that I'm not sure that investors understood when we published this press release, because I talked with few investors, the revenue that we should get from this relationship is one, the 30 million over a few years. And number two, we're getting here a huge capacity of Salesforce that is coming from Sanofi, US, that we're going to take this solution to the market together, and this is something that should have very high impact into the 2023 numbers, because Sanofi already selling into the health plan channel. Health plan channel is the main channel under which we're going to collaborate, and we're going to have like our sales force multiplied by 4 or 5 by Sanofi selling our solutions. So that's something that will contribute to the top line of Dario. And that's additional.
That's great. So what does Sanofi get out of this? What's the arrangement for them?
Sanofi
getting a revenue share or something?
Yeah, so the arrangement with Sanofi is that if they're going to sell, and if they're going to, and it's going to start to kick from a minimum revenue that they're going to generate, they're going to get some kind of a revenue share. It's not going to be done under some white label. It's going to be done under the integrated brand of Sanofi and Dario together, going to the health plan channel and selling. We're going to do it side by side. Our sales team will keep operate and deliver on all the plans that we have. And on top of that, we should have additional revenue generated by Sanofi that we're going to have to rev share, and we'll be happy to rev share this revenue because we want Sanofi to generate as much as possible. So the good news is strategic deal that the whole industry is getting recognition by one of the top healthcare companies in the world. $30 million should be contributed to our revenue in the next few years, from which $8 million should be done this year. And we're going to get additional revenue from the potential sales that will be generated by
got it. So it sounds like that, if I'm understanding this right, it sounds like that 30 million is not based on sales, that may be based on milestones or getting this product launched in different phases.
Yeah, the 30 million is for a lot of things that we are collaborating on. So for example, it might be development services of us integrating medical devices for insulin that are being manufactured by Sanofi into our platform. Elements that related to collaboration around data and how we are leveraging on data in order to deliver value-based healthcare, which is our objective when we are selling digital therapeutics. It's also Sanofi objective when they are selling drugs. So how you look into data, how you analyze data, how you're going to leverage on data in order to provide the right offering to health plans. So all these pieces is something that Dario is putting here on the table. A lot of assets that are going to play on for the benefit of Sanofi, and this is why we are getting paid.
Got it. Oh, that makes sense. Okay, great. So let's. I do maybe have 1 or 2 financial questions at the end if we have time, but because our time is limited, I want to focus on exactly what this arrangement looks like from a consumer perspective. So you mentioned, like, is the brand going to change? Are you going to be co-branding? Is it a new brand? What's going to change for existing customers? And what's the new product, I guess, going to look like after you develop it here with Sanofi?
Yeah, so the immediate impact is that whatever we are doing, selling out there, is something that we're going to keep doing under our brand. Everything, no change. We are running a whole rebranding kind of project post the 3 acquisitions that we did, but this is turning Dario from a single condition into multi-condition. That's something that is on its way regardless of Sanofi. The Sanofi deal is gonna give Sanofi the opportunity to go out there to specific health plans and to sell into these health plans under their name and our name. So I don't see a big change in the overall branding of the company. But when we are going out there selling to our health plan, we can get the backup from Sanofi and their understanding on data and health. And when they are going out there, they're going to get our support in getting these sales generated. Once they are selling, the account is handing over to us in order to get the users to the platform and get them engaged. So the overall machine that we have built, getting accounts into implementation, enrolling users, this is something that will serve also Sanofi. Sanofi are going to be at the front selling to the health plans, getting the deal done, and then we're going to handshake and we're going to deliver the account. So all the consumer management is something that will be done by Dario and with our platform. That's one of the key capabilities that we have, and Sanofi are going to utilize our platform for that. We're going to deliver on the accounts.
Okay, so they're a sales partner, but also you're going to be integration with some Sanofi products as well.
Yes. So Sanofi products are going to be repackaged in a way that they can be digital as a standalone and integrated with our platform. And so ideally, we're going to have an integrated capabilities or an enhanced offering. Let's put it this way.
Got it. And as far as a consumer is concerned, is that, I know when you go sell it to insurers, it's coming from Sanofi and Dario, but is the app, the Dario Health app, is that going to have Sanofi's name on it?
No, it's not going to happen at the short term. I mean, maybe moving forward into the relationship, I don't know what will happen in the future, but at the moment, Dario is going to be Dario, and we're going to keep the brand. We're going to keep and it's very important to know that we have like a very strong commercial team that is going to keep being out there and sell our solution. And whatever we're going to get from Sanofi is incremental on our efforts. So we are still very, very focused on getting our things done, but now we have extra power backing us up. That's the way to look at it.
Got it. That's great. I think I understand that. Are you able to share any details on the equity option that Sanofi has that you mentioned?
Yes. So there is a kind of a willingness that is embedded into the agreement that we might, there is an option, let's put it this way. I mean, Sanofi is not obligated to make an investment, and Dario is not obligated to take an investment. But that's a natural part of the relationship when we're going to grow it up. The idea is to get it done somewhere between June to August, but there is no commitment from their side or from our side to take it. But I believe that eventually, if we want to build a strong relationship, we need to align the interest. So that's something that will be positive from both sides if it's going to happen, and I believe it should happen.
Okay, great. So let me circle back a little bit to the finances. Excluding this deal, pretending, let's say this deal never happened, we were at 8.7 million for Q4. Can you just kind of give us an update on how things are progressing in 2022? And do you think you're on track, again, excluding Sanofi, to meet those estimates of 34 million in 2022 and maybe 8.7 million by the fourth quarter?
Yes, I think that we are in a good shape, and I believe that we're in a place that we can meet this kind of objective. Generally speaking, we got a lot of things done. We are getting accounts into implementation, and things are moving forward the way that we expect. We had this webinar like 4 or 5 weeks ago when we talked about the value of the contracts and the ARR, and the fact that we're going to hit 100 signed contracts by the end of the year, and a potential ARR of signed account of $100 million. So we think that we are on track to meet these objectives, and things looks positive at the moment. And as I said earlier, I mean, the valuation of the company is much lower, and I believe mainly because of the macro environment. But from a fundamental perspective, our situation never was, better than today. So it's just, and the overall space is also there. You have seen. I mean, one of the things that we talked about in the webinar is the overall investment into digital health companies on the private side, the valuation that we see on the private side. One of the competitors raised money, I think, last week in a very nice valuation. So there is some kind of a disconnection in terms of value between where we are to the private market. But at the same time, the fundamentals are progressing, and there is more and more adoption by health plans and employers. So we feel that there is a disconnection, that at some point need to be resolved.
Okay, great. Curious if you can give us an update on the large national insurer that you guys signed recently that you mentioned in the last conference call. There are a couple like phases of rollouts that had to happen here in the first couple quarters before you were able to release the name of that insurer. Just want to get an update on how that rollout is going and when we might be able to hear some news on who that insurer is.
Yeah, so this is something that we are making progress with. We are getting closer to get to the phase 2 of the relationship, and I believe that once we get there, things can be published, and then we can talk about names. They will mention our name, so we are getting to the stage in the relationship that we will be able to publish probably once it's done. So stay tuned, and we are getting there, including disclosure of the name.
Okay, and when that happens, is that already baked in to these analyst estimates that you're kind of indicating you can meet, or would there be additional upside possibly once that gets rolled out?
Yes, I think that it's factored in. I mean, it always can be higher than that, and we need to wait to see how we're going to close this second phase. But at the moment, it feels like we are on track for these numbers where this specific deal is embedded. It might be bigger than that, but we need to sign first and see where it goes. We have multiple opportunities to bring better numbers, and I believe we will, but we need to give it a bit more time to be more certain about it.
Okay, great. I'd be remiss if I didn't ask you about macroeconomics and geopolitics to see if there's any impact here for your company. So the first question for you is if there's some sort of recession in the United States, I guess most of your revenue is from the US, right? So if there's a recession in the United States, I'm looking at it from an outsider. To me, it seems like probably it's not going to be impacted because this is healthcare, and I don't think the customers are paying. It's coming through the insurer company, right? So why don't you give us your perspective on how you think your company may be impacted by recession?
Yeah, so as you said, almost all the revenue is generated in the US. All the businesses in the US. I mean, more than third of the organization is in the US. Some of it is in Israel and in India. So, I don't feel that we are impacted by East Europe kind of situation. In terms of recession, yes, this is something that is concerning generally about the economic. And I think that a lot of small companies might not survive the coming period. And this is why I think investors that do believe that eventually healthcare is going to be more digital and more user-centric, and want to bet about the space, and I can't see how this space is not going to be big. I think that Dario have a huge opportunity with the strong balance sheet that we have. We are stronger than others now, and other small companies are going to be weaker, and this might impact them. I mean, this overall potential recession, and this is where we should be very sharp. We need to look into opportunities to add more assets like we did in the last year, and to be very, very strategic on how we are moving forward. So now, if you think about it, we have Sanofi that is our strategic partner, and whatever we did in the last year in a very intensive way, growing the revenues, get more accounts, making acquisitions. I think that now when we have additional kind of big brother that is backing us up, I think that our chances to move faster is much higher from all aspects. And
can you give me an idea? Maybe I'm missing something, but why would you have a direct-to-consumer business, right? So I can understand if that's impacted a little bit, but a majority of your business going forward should be from the provider and insurer side. So I don't think that's coming directly out of consumer pockets. How do you see a potential recession impacting you?
No, I'm saying that I don't think it's going to impact me. I think it's going to impact the industry. I think that it's going to impact other small companies. I think that from our perspective, given our strong balance sheet, that's a huge opportunity. That's what I'm saying. And if you follow on what we did in the last 12 months, where we have been very strategic and opportunistic on acquisitions, I think we're going to see a lot of opportunities to leverage. So, when things are weak around, we want to be strong. And to your point about why we wanted to strengthen our balance sheet, why we think the balance sheet is very, very strong, also with potential additional capital of equity and the non-dilutive $30 million and what we have in the bank, I think that we are in a very strong position, and we can make moves that are very strategic that others probably will not be able to make. And I think that we're going to see a lot of opportunities. So from my perspective, a potential recession is not a good thing, but I think it's also not a bad thing, because we're going to see tons of opportunities that we're going to leverage on. And we are very, very, aggressive in a good way, trying to find opportunities and to leverage on them. Yeah.
Yeah. Last question on the macro. How about inflation? Are you seeing any impact on the cost side of your business that may impact earnings this year in regards to inflation?
Yeah, I think that overall, when we are looking on the gross margins, I think that we're going to improve our gross margins moving forward. With this deal, the $30 million have a nice gross margins, plus the move to B2B. So overall, yes, we see a bit higher cost in terms of salaries to employees. Some of it is being mitigated by the fact that we are doing some offshore to India and other places. So overall, the impact is going to be minor. We have seen some shipment costs that were high in Q4, and that's something that is like getting back to reality. And overall, the gross margins are going to go and increase. And as you know, from 2020 to 2021, we were increasing our gross margins from 37% to 47% non-GAAP, if you put aside the amortization of the acquisitions. So we're going to see this trajectory of the continuous improvement going into 2022 as well. We want to be above 50, 55, even 60% this year. So that's the objective that we have. So overall, the financial profile is going to improve. The burn rate from Q4 last year to Q1 this year is going to go down, and we're going to show, in conjunction of a very strong balance sheet, we're going to show a reduction in the burn rate of the company. So I think that investors should feel comfortable with our overall situation.
Great. Thank you so much. Coming to the close here, about 30 minutes in. I appreciate your time. I just want to wrap up in terms of catalysts coming up. So what investors may want to be looking for going forward. You mentioned Sanofi might be making an equity investment. We'll see in Q2, Q3. We may be getting an announcement on who that big insurer is in the next quarter or so look out for that. Are there any other big events or catalysts or dates that investors should be aware of coming up in the next couple of months?
Yes, I think that we're going to continue or even accelerate the accounts that we are signing with and getting more plans and employers into the platform. So we are, looking to accelerate
that 100, right? We're 55 now, right?
58.
58 no, on the way to 100.
If you count in Sanofi, it's 59.
Awesome. I'll count them. All right, Erez, thank you so much for your time. We'll be tracking your progress.
Thank you so much, Ben. Thanks, everyone. Thanks. Bye-bye.
Bye-bye.